All right, I've got Brady Mullen for part 4 of our reverse mortgage interview. I put this together, folks, so that you would have a better idea as to whether a reverse mortgage was worth it for you. Is it the right thing for you? Who does it work for? Who doesn't it work for? Are they a scam? Am I going to lose my house? Are my kids going to be able to inherit my property? Is the bank going to take all my equity? All these are things that we have in our head. And I've got Brady with me from CrossCountry Mortgage. I think he is really sharp when it comes to reverse mortgages. He comes from a financial background, not a reverse mortgage background. So he studied reverse mortgages because he was an advocate of them when he was consulting with people for their finances. So Brady Mullen, thanks for joining me on the Lone Ranger Show. Appreciate
Thanks,
you.
Chris. I appreciate it.
Yeah, it's good to have you. We've had this will be part 4. So I want to get out any of those myths that people might have about reverse mortgages. So, first of all, how old do you have to be to get a reverse mortgage?
62 for some products and 55 for others.
Okay. And obviously, the lower your age, the more equity you need in that property.
Yeah. And the reason for that is because all a reverse mortgage does is it makes the equity in your home, that wealth, it makes it usable. It makes it liquid because as it isn't liquid. And I often think about that in terms of if we were to say that about any other account or any other form of wealth that people had, if we were to ask them, would you rather have that IRA of yours or your 401k? Would you rather that be liquid or illiquid? The
Right.
answer is obvious for that.
Sure it is.
Liquidity is an advantage. All things equal, it's a better thing. And
For
that's all a
everything.
reverse mortgage does. Yep. It
For
makes your
everything.
home equity liquid.
And what he's really saying is that if you have a regular forward mortgage, then and you've got a $400,000 house with $200,000 in a loan, your $200,000 is building an equity, but it's not usable. You can't go out and go, I'm going to take that $200,000 and go invest in stocks and make even more money. You can't use it. But on a reverse mortgage, you can tap into that equity.
Yeah. Or if you just wanted to take a vacation or if you had a medical bill to pay or all the reasons that we humans need money, that equity is your wealth. But as it is, it's not liquid. And a reverse mortgage is a clever way that a financier, 50 years ago, figured out a way that you can use the equity in your home without selling it. And
Right.
that's all it does is it makes it liquid and usable.
So now let's just say that you are a couple and he is 72. That qualifies for a reverse mortgage. They want to buy a house. They want to put down 50, 60, let's just say 70% down. But she is only 59. Can that work?
Yep.
It absolutely can work.
Yeah.
Now,
For couples, only one of them has to be above 62 for the FHA product.
right.
Not both.
If he passes, I know that the equity line freezes, correct?
What happens if she's under 62 when they get the reverse mortgage, if
Yeah.
there's any available credit left over and he passes away, she doesn't get access to the available credit in that scenario. But in that case, if they just use the reverse mortgage to buy the house, so they put a certain amount down, use a reverse mortgage to split the difference, then they're not really using it as a line of credit anyways. And so that wouldn't really matter in their case. She just wouldn't have access to any available credit. But in that case, they
So
wouldn't.
what if he dies 10 years and she's now of age? She's over 62. Can she tap into the equity then?
No, she would have to be on the original loan as a borrower when it happened.
That's
The
right.
way they do it now is she's called a non-borrowing spouse. So they can do the mortgage if she's under 62. She just would not be able to access the line of credit. But in that case, if we knew that he was going to die and there was available credit, we would just say to her,
Take it
just
out now.
take it out. Yeah. Go put it in the
Take it
bank,
out right now.
put it in your pocket, or they could always refinance. So if she was after she turned 62, if the numbers lined up, we could just refinance the loan and it wouldn't be nearly as expensive the first time because that insurance policy doesn't have to be paid. And then we could put her on the loan to give her that flexibility. But in that case that you described, they wouldn't be using it for the line of credit. They would be using it to buy that house. And that wouldn't really be as big of a deal.
That's right. That's right. Okay. So now, what about, let's just say my wife and I get a reverse mortgage and we live for many years into our late 80s. And I am slowly adding to my balance, correct? Balance doesn't go down, it goes up as interest
All,
accrues.
Only if you want it to. So the interesting thing about reverse mortgage is people often think that you don't make payments. And the truth is you don't have to make payments. You can treat it like a HELOC and pay the balance down. You can make interest only payments, or you can let the charges accrue on the balance, in which case it will grow. But that's because you're saving the money that you would have otherwise spent on it and
Sure.
doing something else with it.
Okay. So now let's just say that my house is worth $2 million and now the accrued balance has gone to $650,000. Could my kids then buy that house or refinance the house and take over that? They don't, or do they have to pay the full price for the house?
No, what would happen in that case is the same thing that would happen if you had any other mortgage on it. So if you passed away with a $2 million house that had a $650,000 balance on it, whether it's a HELOC, a reverse mortgage, or a forward mortgage, is that okay?
Yeah.
The answer is, yeah, that's okay. And what the kids would do is they'd inherit the house. They'd probably sell it in most circumstances. But if they wanted to keep the house in the family, then they would just have to refinance that 650 into a loan in their names because the borrowers have passed away.
So what we need, because I've got this situation with a lady right now that wants that to happen. And I asked her, I said, first of all, do your kids want the house? Because that's a good question to ask.
Yeah, usually they don't.
Secondly is, I think they would because there'd be a massive amount of equity in it. So, but they could just turn around and sell it.
That's what they will do
wanna grant it.
95% of the time, whether there's a mortgage on it or not. And whatever kind of mortgage it is, they're going to sell it. They're going to take that $1.3 million and split it up among the heirs. That's what's normally
How
going
much
to happen.
time do they have after the passing of the applicant to be able to do that?
That's actually really beautiful because with it, that brings into my mind two different ideas. So the answer to your question directly is they have up to a year. And I want to be careful how I say that because that can be misleading. What they do have, they have 3-month increments that they can extend up to a year. So they got to make sure that they're in communication with the servicer to let them know, hey, we're working on this, we're going to sell it, but they have up to a year. But the other thing that's interesting about that is if you pass away and leave your kids a house with a bunch of equity and a regular mortgage on it, they have to keep making payments while they're settling the estate because that loan requires payments. With a reverse mortgage, they don't have to make payments. If they're figuring stuff out, if they're trying to prove who's the beneficiary on these accounts and this and that, they don't have to worry about making a payment.
Rate can take a year anyway.
Yeah. So they don't have to worry about making payments while they're figuring that out and selling the property. That's that
beautiful thing.
Again, they can make payments if they want to. I don't know why they would, because that money would otherwise be invested anyways that they would be using to pay it. But they could, but they don't have to while they're settling that estate. So that's convenient.
So you know what? This is why I bring Brady on so that when y'all are listening to this, listen, you may be listening to this and you're 40 years old, but you may have a parent, you may have a grandparent that this might work for. These are important that you're aware of this. So you know the loan arranger is right here to help you through this process. We have our own department that specializes in reverse mortgages. They don't do anything else. They don't do regular forward mortgages. We have independent companies, just like our construction perm department, our renovation department, and our reverse mortgage department. I think those are the three that we have that specialize in particular products. But these people are professionals. Why would somebody come to us versus Tom Selleck or somebody like that?
Because these big companies that offer them nationwide, a reverse mortgage is a different kind of loan. It's not a set it and forget it like a 30-year fixed mortgage is. It's a mortgage that you're going to have a relationship with for decades. When to use the line of credit, when not to, when you have tax advantages, how to take advantage of that. You're going to want a contact that can help you through that, work with you, work with your financial advisor, work with your accountant to understand how to take advantage and how to use it in a strategic way in a financial plan. I remind people all the time, when you use a reverse mortgage, what you're doing is you're making your equity spendable, which is making that asset liquid. And you should spend it as carefully as you would any other form of wealth that you've spent a lifetime accumulating, because that's exactly what it is. And it doesn't mean you shouldn't spend it. That's ridiculous. I want my parents to spend their wealth. I want that for them. This is just how this wealth can be spent. And it should be done intelligently and carefully. And it is limited because you only have so much equity. But to do it carefully is an important thing. So having someone that you know that's accountable, that has a reputation they need to protect, that's a human that can help integrate this with your overall finances is paramount.
It is. It is. And you know what? I can't thank you enough for joining me. We will pick this up again But in the meantime, I want to thank Brady Mullen for joining me on the Loan Arranger Show. If you've got questions about reverse mortgages, we have everything you need. We have all the programs you need. We have all the answers that you have. We have consultants that walk you through the process. Everything you need, any questions you have for you, your grandparents, your parents, maybe somebody else that you know that needs our help, please give us an opportunity to help you. I promise that reverse mortgages take a little bit more attention than a lot of people might think. So you need the right people that really care about their clients to help you through. Thanks for joining me today, Brady Mullen, CrossCountry Mortgage. You can reach me. I'll get you connected with Brady's team for reverses at 407 706 3313. That's 407 706 3313. Or Tampa Bay, 813 213 4009. Or go to webringyouhome.com. Get your loan application made there. We will help walk you through the reverse process. Thanks again for joining me. Have a great day, Brady.
Thanks, Bruce.